All right, I just want you to know, I was planning on being here anyway. I didn't roll into New York because I wanted to be in the middle of all this action. But, you know, on Thursday, we had one of the most gut-wrenching 30 minutes in Wall Street history. The Dow plunged nearly 1,000 points over the course of minutes. Now, understanding what is happening with your money during a volatile market and knowing what to do about it is crucial.
So, you know, we brought in our dynamic duo, Doug Flynn of Zito Capital Management and Ryan Mack of Optimum Capital Management. They're going to tell us how to keep your cool during a wild ride on Wall Street. And guys, you know, I'll have to tell you that a lot of people said to me on Thursday, they said, what about little investors? They're looking at the TV and they're making all these trades. And I said, I don't think little investors are doing anything right now. I mean, they look at it over their coffee maybe in the morning when they come home, and they miss this huge move in the middle of the day. If you should not be making tweaks to your 401k based on what happened on Thursday.
Definitely not. And most of the time, if you're in your 401k, you can't really act in the middle of the day like that. You're only getting the close of the day prices, which a lot of people don't realize.
Because those are mutual funds, and they settle at the end of the day.
Exactly. So you're probably not or shouldn't be trading anyway unless you have a side account that you're trying to speculate with.
Plenty of people tell me, oh, I was trying to get through my Schwab account, or I was trying to get on E-Trade, and I couldn't get through. I mean, it was crazy. You have an action plan.
Yeah, let's talk to us specifically about what you think people should do.
There are key points when you want to take a look at what you're doing. A lot of people, if I ask them, you know, what percentage of your portfolio is in equities right now? What's in stocks? And you should know that. And then furthermore, what percentage of those stocks are in international? Because if we're going into a stronger dollar and these situations, maybe you want to relook at how much international you do have.
Meaning you should have less.
Perhaps you should. But it depends where you are. If you only had 5% to begin with, maybe you shouldn't.
Because you think you should have, what, do you think, what do
you tend to favor a larger
I do.
international component.
But there are times when you never want to have 100% of anything, including U.S. stocks. But there are times to have more and there are times to have less. But the key is, where are you right now? If you're at 20%, you could take a look and adjust. If you're only at 5%, you're probably too low to begin with. But the bigger key, after finding out where you are now, these are great times, a crisis like this, is take a look if you haven't looked. Is also what I recommend is take your calendar out in 6 months from now, whatever 6 months is, put a date on the calendar, and look at it then again. Hopefully there'll be nothing going on that day. You also want to think about your investments on a day when you can have a clear head without all the noise.
But right now is interesting to me because so many people have watched the Dow up 14 months in a row, stocks up for 14 months with no pullback. Now they finally got their pullback. Maybe it's an entry point for some people who feel like they've missed a big rally, and they think that longer term the U.S. recovery is going to be okay.
Well, we can't allow ourselves, especially people watching at home, to think like traders. I used to be a trader for about 5 or 6 years, and we would look. I mean, that little blip when I saw that on the screen was like, wow, I wish I was still on the street trading this right now, because we thought in sometimes 30-second increments. And we would trade based upon the morning. We would have our whole trade done by 9:30 and 31 seconds. But we can't allow ourselves to think like that. We have to have long-term perspective. So whether or not the Dow went down 1,000 points yesterday or not, what is your personal situation? How much money do you have to invest? Do you have a budget to figure out what your surplus is and how much you can afford to invest on a monthly basis? Do you know exactly what sort of companies that you would like to invest in? What's your plan? What's your strategy? What are you investing for? Is it for retirement? Is it a new business? Do you want to put some money away into some cash account for a new home? What is your strategy, your overall strategy? And don't worry about the ups and downs, because the market's going to do what it's going to do. We're going to have some errors. There's some errors yesterday. You know, ACN, Accenture trading at a penny. Procter & Gamble's taking off the tape at $39. But there are going to be some errors. But again, the people at home have to understand, what is your long-term strategy?
Well, you always say you have to have a little bit in gold. You say you should have exposure to gold and other things, large cap value. I mean, gold had a great day yesterday. That means if you got hit on some of your stocks, then of course the gold is the diversification. I mean, some of those rules you always tell us are things that would have helped people yesterday.
So that days like Thursday don't mess you up and mess your entire portfolio up.
I still think that if you don't have any exposure to gold in your portfolio, with the risk that there is a potential risk for inflation in this economy, I still think it's pertinent for every portfolio. I do think also as well, large cap dividend-paying stocks, that even if you do have a bad day in your portfolio, you still know you can have 2 to 3% dividend yield coming from these equities that can still give you a good, consistent income stream.
That's money. That's getting money for your investment, even if the value of the investment goes down.
Keep in mind, the market's up 80% off the lows. We haven't had a 10% correction. If you go to the intraday, this is a normal thing when you have that kind of a run. We have to remember where we were, and you're still up big from a year ago.
All right, guys. It's always you guys always bring some some
sanity
to a noisy mess. Ryan Mack is the president of Optimum Capital Management. Doug Flynn, certified financial planner with Flynn Zito Capital Management.
All right, everybody. Next, the hunt for jobs. A new jobs report gives us important clues about where the jobs are.
Stuff in there.
Some good stuff in there. Listen, for some people, it's loosening up and there are jobs available. We're also going to talk about where to find jobs this summer. Plus, why some say the oil spill in the Gulf will do to the oil industry what 3 Mile Island did to nuclear energy.